Hi everyone, Topical Tuesdays today, and we are speaking about DeepSeek Inc., who are all over the news at the moment. Basically, DeepSeek Inc. are a Chinese AI startup, and they've caused a massive stir in the stock markets, mainly because AI companies, AI models like OpenAI's ChatGPT, Google's Gemini, they spent billions of dollars or hundreds of millions at least, and years creating and training their model to get it to the point that it's at. Reportedly, DeepSeek have spent only $5.6 million, and it's only taken them 2 months to get their model to where it's currently at. Tests were done comparing all of the models, and DeepSeek has actually come out on top on a variety of tests, causing a big stir in the markets, a lot of worry and a lot of panic in the AI tech industry. And what that's caused is quite a lot of the tech stocks have dropped off massively. Nvidia, as an example, fallen by over 15%. And given that the S&P 500 is heavily made up of tech stocks at the moment, we've seen quite a dip in that as well. So you may have seen a drop in your portfolios. But focusing on DeepSeek a little bit more, how or why or what has it done? Basically, if we look at China over the last 2 to 3 decades, the reason for their exponential growth in GDP and the reason they've become such a superpower on the global stage is because what they could do very, very well is take something that was a good product or a good service or a good item, copy it, imitate it, and slightly improve it and do it much more efficiently and at a cheaper cost. And that's essentially what they've done here. They've taken the likes of OpenAI's ChatGPT, used their hardware, used the things that they've already done, put in place all the training that they've already done. They've wrote some code and some algorithms that appears to be a little bit more efficient than what ChatGPT is. And it's meant that they've done it at a fraction of the cost and in a fraction of the time. I think part of why they've done it, or what's caused them to do it, is the necessity element. You know, they've had a lot of sanctions on them. The chips have been notoriously hard to get hold of. So I think it's probably out of necessity that they've had to find another route, and they have done successfully. Especially with the changes, you know, Trump coming into power, sanctions that he's talking about, it couldn't have come at a better time for them, really. So yeah, that's why I think what has happened and why it's happened so quickly. For me, there are 3 things to take from this. First and foremost, from a career perspective, secondly from a personal perspective, and thirdly from more of a financial advice and risk perspective. So when we look at career-wise, we mentioned there that what DeepSeek have done very well is if they've copied someone that's in the market that's done a good job and has been successful, and they've improved it. And I think in your career that's important. I know it's something that I do try and do when I see people who are in a position that I want to be in or have done what I want to do. I'll watch them, see what they do, copy them, and if I think I can make a small improvement, I'll make that small improvement. And I think that's important for anyone in their career, you know. And to go back to that example, you've got someone there who's spent years of training and a lot of money, billions of dollars. DeepSeek have essentially copied them and done it for 5.6 million and in 2 months. So, you know, if there's someone who's done all of the learning, spent all of the time doing it, all of the money, don't go and spend all of that time and all of that money yourself. Just go and watch what they do and copy them, and then maybe do a little bit more learning after. So that's the first thing I took from a career perspective, and how I think people can grow quicker in their career and be more successful quickly. The second thing was on more of a personal level. I guess it's slightly important for career as well, and that is perseverance and grit. So it was an ancient Greek philosopher, Plato, who said that necessity is the mother of invention. And in this case, like I said, it proves to be the case. It was necessary for them to create a new way of doing things to be competitive with the AI stuff, and that's what you've seen here. I think in life sometimes things get hard. You know, being in a tough situation, look at it as something that you need to persevere and get through, because it can make you better. You may find a better solution or a more efficient way of doing things. You know, and to emphasize that again, Einstein, he said, in the middle of difficulty lies opportunity. And again, this is something that you've seen. China have probably been put in a difficult position on the AI front, and they've seen an opportunity, and they've gone with it, and it looks like it's going to pay dividends. And sort of, if anyone watched the podcast I did with Sam Oakes on the Hoxton Life podcast, I spoke about why I think Hoxton will be a successful company and won't go anywhere. And basically, the biggest factor for me was the CEO, Chris Ball. He has perseverance and grit on a level I've never seen before. So it's a real life example of how and why perseverance is really important. And if there is a problem, you're going through a challenging time, especially if it's career-wise, if you can push through that challenge, find the opportunities. The reason the opportunities are increased or it's easier to succeed is because not everyone will push through. So you'll have a lot of people or a lot of companies or a lot of competitors who will drop off. So all of a sudden, the amount of people or businesses or whatever it may be that you're competing against maybe is halved. So there's no better opportunity when you face a difficult moment. So that was the second thing that I pulled from it, from both a personal and a business perspective. And the final thing for me was to look at the risk from a financial advice perspective, which is what we do. So first and foremost, I speak to so many people who try and do it themselves these days. Your do-it-yourself, your DIY advisors or your DIY investors, and they invest in ETFs, which is fine. It can be cheap, it can be good. But when you look at what a financial advisor will do, they will make sure that your investments are aligned with your plans, with your retirement plans, and they will reduce the risk of things going wrong. What I mean by that is, let's say you've got someone who's invested in ETFs and they need to pull money out in 2 years' time. Well, if something like this, a freak thing like this happens, the stock markets fall, maybe your stocks or your investments have fallen 20%, and you need to take some money out. Well, you've crystallized that 20% loss. And when you have a fall, it takes a higher percentage growth to get that back. So if you have 100,000 and that falls by 20% to 80,000, well, you now need 25%, because 20,000 is 25% of the 80,000. So you need 25% growth just to get back to where you were. So mitigating that risk by having someone who knows what they're talking about, that can plan out your retirement, plan out your funds, when you're taking them, where you're taking them. Maybe you put a higher proportion of your money in fixed income. You split your money that you're going to need into pots and allocate it based on what you're going to need and when you're going to need and what type of different investments you have. That's really important, and why an IFA or a financial advisor is useful and can be used. The spending and retirement needs, like I said, is the first thing. Allocating investments to the correct types to mitigate risk, and also diversifying your portfolio. We've seen that this has heavily affected the tech stocks, specifically say the Nasdaq or the S&P, because they're quite heavy in tech stocks at the moment. The Chinese market has gone up, so being diversified globally as well may also be what's in your best interest. It's not just a case of go and put everything into the S&P 500. So the final point is that working with a financial advisor, they can help you, they can guide you. Like I said, the stock market, there's been a knee-jerk reaction. Everyone's panicking. There's been significant sell-off. Funds have dropped off significantly, or the values of stocks have dropped off significantly. Having a financial advisor that can sort of guide you along the process and say, well, look, it's a knee-jerk reaction, let's see what happens. My view is that things will recover, stocks will recover. It's just a case of waiting and seeing what happens now. But having a financial advisor that can guide you through that process so that you don't follow suit and just sell off, and then all of a sudden the stock prices go up and you've lost out on a lot of gains, is really important. I hope that has been helpful. Hope it's been interesting. Hope you understand the DeepSeek momentum and what all of the fuss is about. And I hope you've got some good takeaways from this video, and I will see you again soon.